Bitcoin has had a very volatile few days of price action, with price crashing beneath $80,000 before quickly recovering and crashing once again. So here we'll look at the data to try and identify where the actual bottom for BTC may be. Today we're going to be looking into whether Bitcoin has already bottomed, and what a great time to be filming this. As I'm filming just a couple hours before you'll see this, Bitcoin's price has dipped to now beneath $83,000. If I just go onto the weekly chart here, we can see it's been absolutely crazy the past few days of price action, from above $90,000 to beneath 80 to back above 94, and now back as we film this to beneath 82. It's just been absolutely roller coaster moves to the upside and the downside. And if we scroll down here, we can see that the current sentiment amongst investors is extremely fearful, which makes sense. Of course, anyone seeing their portfolio swinging 10-20% plus to the upside and downside in just a matter of days, it's obviously pretty shocking. But what we can see is there's a lot of data to support that maybe BTC has bottomed, but also some conflicting data to maybe point towards some further downside. So we'll look into all of that. But first and foremost, what has caused this extreme volatility? Well, we were expecting a big volatile move for BTC, given the fact over the past few months, we've seen BTC's price really coiling in and ranging between kind of $100,000 to $90,000. And let's be honest, the price action was pretty boring. So we were anticipating a bit of a breakout. Unfortunately, that breakout came to the downside. But then the big spike we had back to the upside was probably in part due to the announcement of a Bitcoin strategic reserve, in part that is, where Donald Trump tweeted out, or whatever platform this was on, that not only it would be a BTC strategic reserve, but there'd also be some altcoins included in there as well. He clarified in a later tweet that he actually loved Bitcoin and Ethereum alongside those other coins that he mentioned. But yeah, if we just go to the volatility chart here, what we can see is after we had a crash, this was tweeted, and then following that we've had some tariffs and some other influences on traditional markets, which has obviously caused this volatility. What we can see is, if we go onto just the BTC volatility chart here, is the level of volatility we're currently seeing is incredibly high. And as I said, we were expecting this. What we can maybe expect now that we've seen BTC have this big volatile period of price action, maybe we're due a little bit of a cool off period. What we can see is, if I just grab this tool here, every time this has happened in the BTC price action where volatility has spiked to this level, we've had quite a cool off period following this. We can see this is just over the past 3 years here. If I just remove that, we can see the first instance BTC had this big volatile spike as price crashed from $30,000 to beneath $20,000. Then we had about a 2-month period where price just kind of went sideways, slowly grinded to the upside. Again, following that, we had a dip from around $23,000 to about $18,000, and we had another 2-month period of price not really doing anything. Same again here after we had the big FTX collapse, another couple months of sideways over here when we had the big dip beneath $20,000 before reclaiming it very quickly. We had a very extended period of price not really doing anything, all the way from back here in March 2023 to pretty much October 2023, where price only had a few $1,000 swings to the upside and the downside. And a similar story in our most recent instance of high volatility back in August of 2024, when the Bitcoin price was around $55,000. We had this big move to the downside, big recovery, and then again it took from August all the way up until probably October before we had a big change and trending direction in price action again. So it wouldn't surprise me now that we've seen an incredibly large move in BTC to maybe reset around our current prices. As I film this, like I said, price is currently around $82,000, $83,000, but it wouldn't surprise me if we maybe set a range between the lows around $80,000 to maybe that $90,000, slightly high mid $90,000 region. What we can see is the big explosive move to the downside is probably somewhat completed. I don't want to say that we're not going to experience any more downside, because we do have some data to maybe point towards further downside price action being a possibility. But if we look at something like the short-term holder MVRV ratio, what we can see here is over the past few days, the average new market participant in BTC has experienced quite a lot of pain, especially those that bought above $100,000. But what we can say is the average new accumulation price for new market participants is currently around $92,000. And as price dipped beneath this, the short-term holder MVRV dipped beneath a value of 1, which indicates that a majority of these new entrants are actually at a loss on their positions. And again, what we can do is actually draw to where this usually bounces, this metric, because this usually acts as a level of support throughout Bitcoin bull cycles. But if we just look to the ranging period of price action we had last year, where there was multi-months of Bitcoin's price just around that $60,000 level, we can actually see that usually it did typically bounce from around where we actually bottomed out in this metric. So the amount of percentage move in price action beneath this level is usually around what we've already seen. So hopefully that indicates that there's not too much further downside that we will experience, but you do have to take into account that this metric can continue moving to the downside. So if we were to diverge slightly lower, then that could result in lower prices. What we can also see looking at the spent output profit ratio, this is the realized profits and losses in the market at any given day. And what we can do is, again, if we just zoom in of the current cycle, obviously there's a huge amount of profit being taken as BTC was above $100,000. But just looking at the most recent few days, we can see that many people were actually selling at a significant loss on their positions, indicating that a vast majority of people were actually losing money on their BTC investments. And again, this is probably aligning with those that bought BTC above $100,000, held for a few weeks or a couple months, and then as soon as we had a little bit of a retracement, that was it, they had to sell. So seeing people selling at a loss is actually a little bit of a bullish thing to see, especially at this point during a bull cycle. But what we can see that isn't as promising is as soon as we did have a bump up above where we dipped below to, so as we retest around that $90,000 level, everyone seemed to sell just to kind of recover their losses. If we just zoom in on the price action here, as soon as new market participants reclaimed this level, were at break even, a lot of them probably sold, and that was it. No more BTC for them. And another not so promising metric we can look towards is the Bitcoin funding rates. If I just again zoom in onto the most recent price action, even though we've had this massive move to the downside with Bitcoin dropping in just a matter of hours, really, from around 90, even close to $100,000 just a couple of weeks ago to beneath $80,000, we can see the funding rates remained incredibly high. And this is coin denominated funding rates. If you look at the USD funding rates, which is what people are actually putting up as collateral to trade these perpetual futures contracts, they're even higher. But really, this isn't what you want to see after a big downside move like this. This indicates that even though we had this huge downside move, people were still looking to leverage long BTC. What we can see is if we just zoom out, every time that we actually get negative funding rates, this is actually a counter trade signal. So this is actually a very bullish thing to see. If I just go to the USD chart, it might be a little bit more obvious to see, is that when we get these big clusters of negative funding rates, indicates a vast majority of people are shorting the market, and as most people are typically wrong most of the time, this is a great counter trading signal and actually provides some fuel for bigger upside moves as people need to cover their shorts as price starts to move against their positions. But like I said, this is still actually quite high, and this isn't really what we want to see given the recent price action we've seen. We'd really want to see people become irrationally bearish and start shorting the market. So this actually gives me some indication that maybe BTC's downside move hasn't quite finished yet. But one thing we can kind of look towards to say this is maybe a slightly more promising metric is the BTC open interest over the past few days and weeks has actually declined massively. So this is looking at the total value of those open derivative contracts. And what we can see is over the past few months, this has decreased from around $260,000 before temporarily increasing a couple of days ago as Bitcoin was looking towards this big volatile breakout around here. But now it has actually decreased quite substantially, indicating that a lot of over-leveraged traders and market participants have maybe now had to forcefully close out their positions. And as this is dumped in just, again, a matter of few days from over 240,000 Bitcoin to under 200,000 Bitcoin in these contracts, that's billions of dollars just wiped out from the market due to this volatility, which again is actually quite healthy. We really want a spot-driven market. We don't want a market that's massively over-leveraged with people just relying on derivative contracts. Although what we can see is looking at institutional traders through ETFs is that we have actually seen, again, a not so promising indication of the amount of outflows in these products. So we can see just looking at the worst day here, which was February the 25th, we had nearly $1 billion outflows from these ETFs. And over the course of the last few days and couple of weeks, this has massively exceeded multiple $1 billion, which again, isn't ideal to see. This is obviously having a big impact on the BTC price action. One thing we can actually look towards is something like the money multiplier effect. So just because we're seeing $1 inflow or outflowing into the market, that doesn't necessarily mean that we're going to see $1 increase or decrease the Bitcoin market cap. The BTC money multiplier, somewhere around a value of around 5. So if we see $1 outflow from the market, it has an impact of around $5 on the BTC market cap. So if we're seeing billions of dollars outflowing from these ETF products, then that's obviously having a huge impact on the BTC market cap. unfortunately to the downside. If we just looked at yesterday, what we can actually see was the amount of outflows we saw had massively reduced, but the market actually continued to move to the upside. So we're potentially now looking at market conditions which are actually more influenced by everyday retail traders and whales rather than these institutions. Now, one thing I'd like to address as well is we actually put out a report that we made publicly available. These premium reports are usually only available for site subscribers, but here we were actually looking into the possibility of BTC having bottomed out at around $80,000. So at the time of writing this, it was about 86, but we anticipated 80K would probably be the BTC bottom in price action. We compared this current cycle to previous cycles and the drawdowns we watched, and here we were looking at just TradingView charts. But as I said, now we're actually seeing some bearish technical analysis. We're seeing still positive funding rates. We're seeing people taking profit. It does point towards some more downside being possible. So if we just go to the TradingView chart here, what we can do is we can see I've added on just the 200 daily moving average and the same Fibonacci retracement we saw in that analysis there. And what I've done is just draw the Fibonacci retracement tool from the low we had before the big explosive move to the upside, and then drawn from the top there. And what we can see is BTC, when it initially retraced to this 0.618 level, or I've got them reversed, so it'd actually be a 0.382 level, we could see that Bitcoin had a little bit of relief before we came down, tested this 0.5, came back up, almost perfectly retested this upper level here, this 0.786 level, and now we're actually sat right on this 200 daily moving average. So I do think hopefully now we can see a little bit of a cool off in the price action, hopefully not too much more downside, but it wouldn't surprise me actually if we came down and retested this 80K level. If we had to see a lower low, what we definitely don't want to see is something like this, where the 200 daily moving average is continuing to move up. We come beneath it, turn this into resistance and move substantially lower. That'd look pretty bad for price action, but I do think as long as we can hold this $75,000 level, then things don't look too bleak, at least from a macro perspective. This would still look like a potential higher low in price action before we can potentially move even higher. But one thing that has caught my eye is if we just look at the most comparable period of price action from recent history, which is when BTC in August of 24 wicked to beneath $50,000, similar to what we've seen here before recovering, and then obviously had a higher low as price came back down, and then we rallied up to around $100,000. If we just draw on this price action here and potentially look to what price could do if we were to follow a similar pattern in price action, what we can do is add this on here, and this kind of scenario would make sense in my head, where we come down, retest this, and Bitcoin's price now, hopefully we can regain this $85,000 level, and then we can maybe come up, set a double top here, the price action would come down, maybe retest the 200 daily moving average. We have one quick flush out, finally get everyone shorting the market, everyone incredibly bearish, and at that point we have the fuel to potentially move higher as we get a short squeeze as Bitcoin's price moves up. Again, we maybe come back down and move higher. So I'd actually say that's a pretty likely scenario over the coming days and weeks. So just something to watch. Of course, it's not going to play out exactly like that. But overall, to answer the question, has BTC's price action bottomed? We definitely can't say that it has for certain. If you'd have asked me a couple days ago when we saw BTC reclaiming $90,000 after just a couple days beneath it, I'd have said, yes, this shows a huge amount of strength in the market, especially given the fact that it aligned with the technical factors we were watching and the on-chain data. But now we've immediately seen, following this rebound, everyone once again taking profit on their positions, that short-term holder realized price once again becoming a level of resistance, and people just aggressively long in the market. It does give me some slight bearish inclination that we may spend at least some time below 90K, potentially not set lower lows, but I definitely don't think that we can definitively now say BTC has bottomed. One other thing we can look towards, if we just zoom out and look from a macro perspective, because a lot of people see this price action and potentially say that the bear market is now begun, the bull market is over, but if we just look to a more zoomed out macro perspective, looking at the MVRVZ store, we still have a considerable amount of upside room to go. Of course, we'd have to reach this upper red region in this cycle, but this is an incredibly good area for great risk to reward to potentially dollar cost average in if you are looking to accumulate more BTC in this bull cycle. There's no confirmation that the bear cycle has begun, and if we look from a macro perspective, looking at something like the BTC versus US dollar index, what we can see is as BTC crashed, this actually moved to the upside, which may have again resulted in a little bit more fear in the market and a little bit more of a bearish sentiment. And now this has actually once again begun decreasing. So again, that gives me some confidence that even though we may not immediately bullish reclaim those levels we discussed, that maybe the BTC bottom is in. But overall, like I said, if you are in doubt, just zoom out. Everyone focuses on incredibly close price action. But if you just go to a weekly chart, zoom out, things don't look too bad. All the way back here, this is what everyone's worrying about, this 20% dip that if you zoom out, barely even looks like anything on the chart. Compare this to 2017, we had multiple huge drawdown periods, even in the previous cycle. If you look at our current cycle, of course this doesn't look ideal, but really it looks pretty typical for BTC. And like I said, from a macro perspective, as long as we don't set considerably lower lows, as long as we potentially retest this $75,000 level, if we were to retest a lower low, then hopefully we can set that as a higher low from a macro perspective, come up, and then that would be a base for BTC to move to new all-time highs throughout the rest of 2025. So just to summarize, Bitcoin has had a very volatile few days of price action with a near 20% drop in price followed by a quick recovery of over 20% before another substantial drop. As I said, it's been quite a roller coaster for the BTC price action recently. And although identifying a local bottom in price is never easy, we can see a substantial amount of data pointing towards that BTC bottom being around that 80k, although there are some arguments, like we could see from the funding rates, potentially that short-term holder realized price becoming resistance, that BTC could temporarily dip lower, although that 75k level I think will be a very strong level of support, again aligning with some technical levels, and that would really bring an amount of fear in the market and bearishness that I think we would potentially see a lot of people shorting. That'd hopefully give us some fuel to squeeze higher and potentially really set this as the local low of this downwards move. Although what I can say is the most likely outcome is probably just some more choppy price action. What we've seen over the majority of this cycle is Bitcoin has these big volatile moves, extended periods of sideways boring choppy price action, and then we have these big volatile moves again. So we could potentially set a new range around the lows of $80,000, hopefully above 85k, and towards that 90 to mid 90, potentially $95,000 region. But what we can say is just zooming out and looking from a macro perspective, from a cycle by cycle basis, looking at macroeconomic influences, there's no overwhelming amount of evidence that the bear market has begun. Of course, from a technical perspective, things don't look great, but again, zoom out, and as long as it aligns with your strategy, I do think this area is a good area to potentially start scaling into BTC. And if we do see a few percentage lower, potentially you can start aggressively DCAing in just a little bit more. But ultimately, as I said, I think the risk to reward here is great after already seeing quite a substantial downwards move in BTC. If we had set new all-time highs, nobody's going to really care if you were accumulating BTC at $82, $81, $80,000. The risk to reward is just massive, and the upside potential from a macro perspective still looks very much intact. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports like you're seeing here, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin potentially bottoming out. If I had to bet, I would say I don't think we make lower lows, but I do think that 75k level, if we do reach that, would definitely be a strong level of support of BTC. And I do think even if the lows aren't in, that we are probably 70, 80, 90% of the way there. So for me, this is an area where I'm aggressively dollar cost averaging into the market, especially given the fearful sentiment we are seeing. And hopefully, even though there's probably some boring price action ahead of us, we do see a little bit of a recovery in the BTC price in the not too distant future, especially if, like we can see here, the traditional markets such as the S&P 500 and gold begin to again start increasing due to their correlation with BTC. But as I said, let me know your thoughts and comments down below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.